watching Stock Watch. I'm Zinati Kuma, and joining me to unpack your stock-related questions today are Zwelakhe Mnguni from Benguela Global Fund Managers and Ricus from PSG Hole in One Ruimsig. Be sure to send your questions through via email to stockwatch@bdtv.co.za, via SMS on 41392 or an X at Business Day TV using the hashtag StockWatch. So just a note there, we are pre-recording this show, but do continue to send your questions as we will be answering them when we come back after the long weekend. All right, let's get the show on the road. I don't know. So after 3 great sessions on the JSE, it's kind of given back some of those today. And I'm wondering, Zwelakhe, if it's just the holiday mood at this point.
I think there is a bit of volatility, more than just the holiday mood. I think there's a bit of volatility in the US, if you look at it. And there is a bit of uncertainty. Typically, people don't want to go into a long weekend and they've locked positions. Some of them would basically unwind their positions and reload them on Tuesday when they come back. So the main thing is that the U.S. market was under a bit of pressure and very volatile yesterday.
Yeah, and it's actually quite interesting because we did have Fed Chair Jerome Powell coming in with comments at the Economic Club of Chicago, and seeming that there was something that spooked the markets there. Ricus, I felt like Jerome Powell was kind of fair, saying that, let's wait and see, and maybe they'd kind of have to balance what's happening with inflation and what's happening with the economy. Is there anything that he said that was worrisome to the markets?
Yeah, basically he changed from his previous speech where he said that, to put it bluntly, that tariffs might have a short-term effect. And he changed it slightly, saying, well, it's going to have a short-term effect and it might have a longer-term effect. And that he's hands are tied until the data comes in, because either inflation is going to be under stress, or jobs are going to be under stress. And depending on which, he's between those two poles. And depending on what happens, will then inform what he's going to do with interest rates. But the main thing was, as I said, where he extended his outlook as far as tariffs is concerned from a short-term disruption to possibly a longer-term disruption. And that spooked the market.
I see they're very careful with their wording, and especially that wording of transitory now. So I do get where he is coming from. He doesn't want us to just focus on one thing that he said. All right, well, talking about what is happening with the US, the semiconductor chip sector has also been in the spotlight, and there's a question on NVIDIA here. One of your analysts said it's a good time to get in on NVIDIA despite current uncertainties in the sector, especially if you're in for the long term. So the viewer says they're 66 this year and working on a pension. They hope to be available in 10 years' time to start drawing on, and they're asking if 10 years counts as long-term, because they sometimes get confused between short, medium, and long-term in terms of stock buying. So, maybe Zwelakhe, you can start off with short, medium, and long-term. Yeah, just breaking that down.
And I think it depends on the individual, but broadly, we all have a kind of sense people are in the market. I think if you're looking at the next 12 to 18 months, that would be short term.
Okay.
If you're looking for 2 to 3, 4, 5 years, that would be the medium term. And then if you're talking long term, you're probably looking 5 to 10 years, depending on which point in that whole value chain you're looking at.
Okay, so even with the uncertainties, because of course we did have news coming out that the US government has placed some export licensing requirements on NVIDIA. We saw that stock taking a knock yesterday, not exactly sure. Today, I think it was about 6% yesterday. But Zwelakhe, would NVIDIA be a good investment for the long term, for 10 years?
I have no doubt that in the long term, it is a very good stock. I mean, I think there is an obsession about its chips business, but there is a bigger ecosystem around NVIDIA. They've got a platform called CUDA, where they are able to use that platform, or the developers are able to use that platform to quickly be able to develop applications that are useful to their clients. And I think out of all the chip makers, there is no one that has that. So they've got an advantage where they've got fantastic chips that are high processing power chips. So the Blackwell chip is going to be highly useful in the data centers for processing and low energy intensity. Then you have the ecosystem around it. And I think it's something that would probably pay off for the long term. So I think the short term, the market did get a bit of ahead of itself, but longer term, I think it should work out. I think the tariffs and the impact of all the limitations, restrictions about exporting to China. I mean, that H20 is not their biggest product, to be quite honest. So it is a product that they designed specifically for China that has limited technology. So it's not going to be a major impact in the long run. I think it will have an impact in the short term, but in the long run, it won't be. So I would say long term, even medium term, I'd still say it's a good investment, but I'd be cautious about the short term or at least the immediate term.
Yeah. Ricus, would you be looking at the chip sector with the same goggles or overall, or maybe not, that where there's more value in others more than others? Because, I mean, you look at the results that have been coming out, disappointing net bookings from ASML yesterday. I think profit was okay. It was in line. But there was worry about those net bookings missing estimates. And then today we had numbers coming out of TSMC where they actually topped estimates. And of course, there's still that optimism around NVIDIA. So would you be looking at them with the same eye or different eyes?
Well, in the short term, and by short term, I mean 1 year.
Yeah.
Within 1 year. That's my textbook definition as far as I can remember. I'm cautious about anything in the US market that's trading above a 20 or a 25 price earnings. Not saying that these aren't, for example, NVIDIA, a company that's got a big moat at the moment as far as both their chip making and the bigger environment is concerned. But in a market that is looking, well, that's already down about 10 or 15%, and possibly and very easily can do another 10 to 15% down. Just because we don't know what Donald Trump is going to do. I'm just cautious about things which have got a high P, and even after yesterday's price decline on NVIDIA, it's sitting at a 35 historic P, which means that I'd be very cautious. I'd certainly, when things stabilize, one can have another look at it. But at the moment, I would rather be defensive, and if you don't want to sit on cash, then look at things which are not historically at that dearer point.
All right. Well, also a huge compliment to you guys. The viewer says, thank you again for a wonderful show. It's invaluable to me at this time. My aunt, who died last year, age 87, says, I have no business investing in the stock exchange if I'm not watching Stockwatch. So very, very huge compliment to you, gents, and also our other analysts. Let's get into more questions. And of course, when I saw the Sasol production update today, I knew we would get an influx of questions. Please ask the panel about Sasol at 65 Rand. I don't know, Zwelakhe at 65 Rand, at 58 Rand, at 99 Rand. It has seemed to be the same narrative, just don't. But your take at this point?
Look, Sasol has got some challenges, and we need to separate the challenges from the market valuation. So firstly, there is the decarbonization issue, which they are trying to transition out of. I saw them putting out a statement where they could produce synthetic gas to basically supply the market. And that would basically give them some credits against their Secunda plant that is highly damage to the environment.
Yeah.
Then the second issue is their balance sheet that is quite vulnerable in an environment like this. And then the third issue is that if volumes come down, as they seem to be suggesting in their statement, they continue to see volumes coming down, I think we'll see them coming under pressure, and that's where the balance sheet vulnerability comes from. However, they've hedged some of the oil price, so if price goes below 64, they'll still be fine. I think where the share price is, it implies quite a significant downside from current level. And with the hedges in place, I'd probably at 60, between 50 and 65, I'd probably be nibbling on Sasol. I wouldn't be making a bet. It's not a great quality company, but I'd still say that there is a price for everything for that investor.
Yeah. And I mean, listen, it's everything. It's external things, it's internal things. It just can't seem to catch a break. And I actually just saw that their revenue for chemicals was up, I think, in the last 3 months of that 9-month period. But it even seems that this is still quite shaky, because a lot of people have said that for Sasol to maybe even get a boost is for the chemical prices to remain at sustainably elevated levels. Ricus, your take on Sasol?
Yeah, I mean, there's just looking at the price chart, I don't get the sense of any type of turnaround in that downtrend yet. What they said this morning, there's still mounds of problem. I think they said the revenue might be better than expected, and I think that was about the only good news that I saw. And it's hugely volatile. I mean, just over the past month, the share price has oscillated between about 55 Rand and 75 Rand. So it's great for trading if you want to play that game. But first of all, it is a cyclical company. That's in a downturn. So you don't invest in cyclical company to start off with. You try and if you want to do that, you try and trade it. And when you trade it is when it's at the bottom of a cycle. And how do you normally know it's at the bottom of a cycle? It's when it starts going sideways. Then you can possibly start looking at it in conjunction with what's happening with the markets that they deliver product to, and then one can start getting a turnaround, and that's what happened with gold shares, for example, a while ago, sideways and then up. But until such time as the Sasol price doesn't stop declining, I don't think there's a need to try and catch to the bottom. You might as well just wait for it.
Yeah, you're actually right, because it has not been going sideways at all. It's been very, very volatile. So yeah, I guess we'll see what happens in the coming weeks or months. All right, so we have more questions coming through. And actually, we were talking about this off air, that I think this viewer is an accountant, because it's a very technical accounting questions here. With the provisions made by First Rand for the outcome in the UK investigation, if it is found that First Rand does not have to pay up for the future concern, how will the provision be unwound and hence show up on the balance sheet and or income statement in the next reporting period? Perhaps as other comprehensive income. Zwelakhe, I think you had insight on that.
Yeah, so it would basically be the reversal of a provision. So the balance sheet provision, where you have a reserve, a provision reserve, would be a credit account. So what you do is you debit that, and then you credit the income statement. So it would be effectively a reduction of expenses. So you would have increased your expenses in the past when the provision was raised, and now you're reducing your expenses, which are debit accounts, and you basically just put a credit against those expenses, and you'll get a reduction in the costs.
And actually, Ricus, I mean, obviously, this is still ongoing, so we don't know, we don't have a clear picture of that outcome yet. But a very interesting question actually came through, I think, on Tuesday, that a lot of analysts have been talking about value in the other banks, not necessarily First Rand, and clearly this is one of the clouds that's hanging over the company. At this point, what would your take on FNB, even with this a cloud hanging over it, would you still be finding value in First Rand?
Well, I think the banks in South Africa historically are at very cheap levels. But with, as you've said, this cloud hanging over First Rand, there's it's uncertainty again. You don't know what the courts are going to decide. I mean, the first judgment was caught everybody by surprise. What says the second one isn't going to do the same thing? So you can't really quantify that. So I would tend to wait for the court to make its judgment, which I believe is in April, before looking at it. But if it is in First Rand's favor, then I think it's well worth the buy.
All right. Well, let's go into mining. Quite a number of questions on the miners. The first one is on Exxaro and Thungela and their all-in costs. Besides life of mines between Exxaro and Thungela, why would the financial reports between the two companies have such variability in all-in costs to mine coal, assuming the commodity is seemingly similar grades for local and export sales? Why is Exxaro so much lower than Thungela? Is this something that you've looked at, Zwelakhe, or noticed?
Look, I think that there are different mines in both businesses. And I mean, broadly speaking, I think they're producing at around 1,300 per ton. So the difference is just that some of the mines in Exxaro would be slightly higher cost, but they also have a number of low-cost mines. The broad thing is that you don't get it to be the same. Your ore body is not the same. Your mining methods could have an impact in terms of how you get the ore out. So I think it's not materially different in currency, but it is something that is marginally different here and there. Exxaro is more inward focused, less export, whereas Thungela is more export focused. So when prices are better outside, even if the cost of production are a little higher, they can handle that. Whereas Exxaro has got a lot of contracts that are tied to Eskom.
Okay. All right. Very interesting. Thank you for that clarity, Zwelakhe. I'm hitting you with Glencore, Ricus. Is Glencore a buy at current levels? We had a number of diversified miners actually coming out with their production updates today, BHP and South 32. How is Glencore faring?
Well, first of all, price-wise versus Anglo and Billiton has been the worst performer of the lot, over the past year or so. So I haven't really been looking at it. So I can't give you any great fundamental insights into it, because what's the use analyzing something fundamentally while the price is still going down? I get interested when prices start going sideways, as I mentioned with Sasol. But that being said, obviously hugely exposed to copper. I think one of the reasons the price hasn't performed in line with the others is because they had to scale back in some of the coal operations in Australia, and that obviously hits revenue and income. Quite interesting, because it seems Glencore has been the laggard. Even today, we actually saw the BHP share price up after that review. Zwelakhe, Glencore in your radar or not?
I'd say probably I'd be more inclined into Glencore than BHP, as an example. BHP is a good low-cost producer, but I think the dynamics on the ground are changing in that China's big infrastructure projects haven't come through, and they are a major source of demand for iron ore. And I think BHP is about 50% EBITDA in terms of iron ore, and coal is probably another 25 to 30. So they heavily reliant on China, and if China slows down, I think BHP wouldn't be good. If I look at the portfolio of Glencore's minerals, I mean copper, cobalt, nickel, they do have some coal, but overall I'd probably be more inclined to a portfolio that has copper in it than a one that is heavily reliant on iron ore at this stage.
Well, there's a question on Altron. Why is Altron not rising with the tide? Ricus?
I think they're going down with the tide because we haven't been all that positive as far as industrial companies, listed on the JSE is concerned, specifically SA Inc. So that's the part explanation. The other is that this Altron's price almost doubled in about a year and a half, and they're about 25% down from those highs. So I think it overran respective to their results, which was very good. To put that into perspective, their average price earnings over 5-6 years is around about 13 and is currently trading on an 18. I think there's been a change in view as far as the growth prospects of the company is concerned, but not to the extent to which the price had run.
Okay.
So at the moment, it's mean reverting to a more sensible level. But it doesn't distract from the fact that I still think it's at the right price.
All right.
Locally speaking, one of the few mid caps that I think is actually quite sensible to invest in.
Zwelakhe, your take on Altron before we get to your stock picks?
Look, I do think it is looking relatively attractive, but I think there isn't a catalyst on the horizon that I could highlight. So I'd buy more for cheapness. It's a decent company, relatively capital light, or they've been working hard to become capital light, but certainly a business that is cheap at the moment.
Well, what are you gents buying today? Ricus, your stock pick for today?
Abbott Laboratories, they're an American listed health company. They're not so much into pharmaceuticals as in medical devices, which I'm interested in because of the prospective benefit they can get from AI in the products that they are developing. And they are known for developing this type of thing. They've got about 25 products in their pipeline. That's also where their future growth is going to come from, whether it be in cardio or blood testing. They haven't cut their dividend more than 25 years. So again, as I always say, a company like that know what they're doing. Results out yesterday, it was better than expected. This market, they're sitting on a 16 historic price earnings. I think that's cheap. So it's a growth company with a lot of runway, if I can use that cliche, ahead because of the products that they are developing. And I think a decent buy in a defensive sector in current market circumstances.
All right. Zwelakhe, what are you placing your bets on today?
Yeah, I'm placing my bets. I'm being defensive like Ricus, but I'm looking at Microsoft. I think in an environment where there is volatility, which is often an opportunity, I think these stocks have pulled back, and Microsoft has also pulled back. I think what is attractive about it, their business model is defensive. We all use their products in the business, and they've got a few areas where they could still extract growth. One is pricing power. Two is their AI product. I mean, I don't think they are anywhere close to ChatGPT or Grok, but I think as they evolve, they will be able to extract value out of that. So I'm more positive about it against the backdrop of a volatile market.
All right. Well, thank you so much for your time and your analysis today, gents. Much appreciated. Do enjoy your Easter holiday. And that is all for tonight's Stock Watch. Thanks to our guest, Zwelakhe Mnguni from Benguela Global Fund Managers and Ricus from PSG Hole in One Ruimsig. To our viewers, do enjoy your long weekend. Up next, the close day watching.